Hi, welcome to this presentation on how to best structure your building business for success. Building and property development relies heavily on laying a strong foundation, and it's no different when it comes to your business. You need to have the right structure. My goal for you in this presentation is that I want to help you to ensure you have the best possible structure. I want to help you to ensure that you do not pay $1 more tax than you should, and I want to help you get the chance to live the lifestyle you desire. My name is Tonystips. I have over 30 years experience as an accountant and over 18 years as a CPA. I'm a director of AD Partners, Accountants and Advisors, and I'm an alliance partner of RBN, the Home of Builder Registration. Father of 3, sports lover, and I'm very passionate about helping business owners. Why is structure important? Well, it reduces tax. It gives you flexibility, it enables you to grow, and it gives you peace of mind. So what do you need to understand? Well, there's two key elements. One is what your options are, and then secondly, what should you be thinking about? So what are your options? Well, there's 5 key options. The first is an individual sole trader, the second a partnership, the third a company, fourth a trust, and fifth a superannuation fund. So with an individual sole trader, that's typically for a sole operator. Your ABN is in your own name and your income or loss is recorded in your personal tax return. It's suitable for low income earners, and the compliance fees are generally a lot lower. A partnership is when 2 or more individuals are working together. So the ABN is in the partnership name and the income or loss is split across each of the partners and recorded in their individual tax returns. Again, suitable for lower income earners. The third, a company. It's a separate legal entity. The company tax rate is lower than the upper personal tax rates. So it's suitable for higher income businesses. You have a lot of flexibility in terms of adding or removing partners, and there is asset protection with the company structure. The fourth is a trust. Again, a separate legal entity. All the income, however, is distributed to the beneficiaries. So none can be left in the entity. It's all distributed. Losses are captured within the trust and have to be carried forward to later income tax years. There is flexibility in distributing the income to lower income beneficiaries if you have others within your family network that aren't earning income or earning very little. And again, it does offer asset protection. Superannuation fund. It's not typically suitable for a building trading business, but is suitable for property development, depending on the development itself. The income remains in the fund for retirement, and it's the most tax-effective structure. So what do you need to think about? Again, there's 5 key areas. 1 is asset protection, 2 is tax minimisation, 3 is control, 4 is the cost and the ease of administration, and 5, flexibility. So with asset protection, you need to consider the structure if you get sued. Now, whether that's by some suppliers or others that you're in business with or that you're doing business for. Secondly, if loans are called by banks or financial institutions. Or thirdly, if something happens to you. So remember, a company is a separate legal entity, so it can offer you asset protection if structured correctly. Tax minimisation. So if you're a trading entity, which typically in the building game you are, then income tax is important. So being in the right structure to minimise your tax is important. So as I touched on, the company tax rate is lower the more income you earn. With investments, then capital gains tax becomes important. So again, having the right structure for investment type activities. The third area there is the individual versus company tax rate. So as I said, the more you earn, the higher tax you're going to pay in an individual sole trader structure, or if you're in a partnership with others. Whereas with a company, it's capped. From 1 July, it's going to be flat 25%. So accessing these lower tax rates is important, and having the flexibility to be able to do so. Control. Ownership and control aren't necessarily the same thing. So in a company structure, you can have all the control by being the director, but have no ownership if you're not the shareholder. Now, why is that important? Well, it's important when it comes to an asset protection point of view. Who has control and who has ownership? And again, your family network. If you have others that can take ownership and or control, whether that's for personal assets or business assets, it can really make a difference. There's a saying, own nothing, control everything. Cost and ease of administration. Well, there's cost in setup, there's cost in ongoing registrations, there's cost in accounting. The key here is to think long-term, not short-term. So whilst there's some initial setup costs, the long-term benefits of saving tax will far outweigh those costs, if done correctly. The flexibility in distributing profits, the flexibility in adding or removing partners, and or succession planning, what happens toward the end. So circumstances change, so your business structure must also be able to change with it, so you can benefit. So what's the best structure for you? Well, a company structure ticks the vast majority of the considerations of a profitable trading business, but you really need to have your own personal circumstances reviewed. Now, getting into your builder registration with the VBA. Obviously, you need the industry qualifications, your project work needs to be evidenced, you need a referee report, all your checks and declarations, and of course insurance, which is one of the big ones. So you're building insurance, you need a certificate of eligibility to purchase domestic building insurance from your insurer. Now they're likely to require a number of things. Obviously the completed application, last 2 years financial statements, interim financial statements for the current financial year, evidence of property ownership, bank statements, both business and personal, forecast of work for the next 12 months, and if you're in a franchise agreement, then a copy of that as well. Now there's an unwritten rule which suggests that the level of insurance that you're going to be granted is approximately 10% of the total of your personal and business assets. This can vary depending on the insurer and your personal circumstances, but it's an important thing to consider. Now, if a company is registered as a building practitioner, then it must hold the required insurance in the company's name. Now, you can register your company only if one of the directors are also registered as a building practitioner. So what must you do now? Well, firstly, you need to choose or amend your current structure. You need to complete the license requirements, the insurance requirements. You need to plan and prepare all that information, and you need to get the right support team behind you. Come to the end. Thanks for your time. If you have any questions, need any help or support, then you can please email me at tonyd@80partners.com.au or contact the team at RBN directly, and they or I will be more than happy to help. Hope you found this useful. Bye for now.